Hey guys, how are you all doing? So Dan from Trading with Dan here. This is our Bitcoin evening wrap up. So straight over to those charts. Right, so here we go. Here's the 4-hour chart. So yeah, as you guys will know, we had a nice pump up from basically the support level to the overhead resistance level. So we're just obviously testing this resistance now, seeing if we can break and hold above it, or whether we're going to get rejected and start bouncing around the underside of it like we did here for a while. I would guess that now we've come up here and tested it again. We should get back above, I think, and then just play around this zone for a bit before we make a move for that 10,000. Yeah, we have coming down and nicely tested the top of that pennant trend line, not tram line, trend line. That I was looking for a move, hopefully, to get supported there. Obviously not wanting to break below these levels we had here. There was quite a nice easy trade on the smaller time frame after we had that rejection wick, and then we started to trade back up again towards the 9,500 level. We had a nice long wick. I didn't actually see this 9 candle on the 1 hour, but yeah, there's a TD sequential trade for you right there. I don't normally look at the 1 hour charts, but yeah, I was just looking at the candlestick and my levels. So it was a trade that we put on to buy. Basically we're buying like mid 9,500, 9,400, sorry, I think it's about 9,470, with our stop just under that wick and targeting the basically 9,700. So yeah, played out a bit quicker than I thought it would. I have started putting these ideas, actually. I'm going to start putting some of them as well, some of the forex ones and the other market ones. I'm putting them in on my TradingView. So if you go over to here, here's my profile. This is how it works. Profile. So this is my TradingView. If you want to find me, Danny B888, and this was the trade idea anyway. Potential BTC long trade, 2-to-1 risk reward. So this was basically what we were looking at. So this is where we're going long here, around, as you can see, look, 9,470. Basically targeting resistance. This is just the easiest way to trade. Just buy support, sell resistance, or sell resistance and buy support. Obviously, which you could have done there, sold the resistance and bought the support, buy the support, and then obviously you guys know what happens if we hit play. And there we go, getting the move pretty much straight up. Obviously trades don't always work out full stop, let alone work out so quickly. But yeah, that one was quite a nice move up. So yeah, feel free to follow me on TradingView if you guys have it. If you don't have TradingView, I think there's actually a link in my description for you guys to use to get it. So I think you get, like, if you do get like one of the paid subscriptions, I think you get like $30 off or something. But to be honest, most people can just use the free version. It's only if you have like a million indicators like I do that you might want one of the paid versions. Oh, there's our descending broadening wedge that we've got going on the large time frame. But anyway, yeah, so back to what we're looking at. So yeah, it is looking good again for the price action, and we have definitely got supported here. You can see we've moved up. I don't know why I'm on an hour time frame. That's too zoomed in for me. But yeah, so yeah, we're back at this basically resistance. So if we can just get back above here, it wouldn't be very likely for us to get rejected straight back down. I mean, if we are going to come down, I'd expect it to look like this, maybe, where we play above and start to drift under. But we've already done that once, and I don't feel like it's going to give you a chance to buy down here again. So therefore, I don't think it's going to get down there again before playing some upside. So we'll have to see what happens there. 4-hour Stokes starting to look good. 12-hour Stokes. 12-hour Stokes are literally just flatlining here, but they're flatlining in a higher zone, which is good. This 12-hour candle looking a bit better, and let's see what the weekly is looking like. Weekly is looking a little bit better now, a little bit more green. I mean, if we can get basically back above this 9,800 and be somewhere around here when we close, which I believe is going to be soon. Yeah, in 3 hours time. 3 hours? Is someone trying to paint the candle for a weekly candle close? by any chance. But yeah, so if we can get back up here, or even over 10,000, it may look pretty good. And I wouldn't put that past the market in the next 3 hours to pump us up here to about 10,000, just to just literally to paint the charts. But yeah, don't obviously, that's not a high probability trade scenario anyway. So don't try and do that. Anyway, let's just turn these drawing tools, lock these drawing tools. Yeah, so it's pretty much looking a lot better than it was earlier today. Obviously earlier we were on that 9, we were getting like downwards price action, we were getting resisted by the overhead overhead resistance, the resistance here. We got sent down, we wicked below. It was looking a bit dicey once when we were trading under 9,400, but that wasn't for long anyway. The wick clearly went on a stop loss liquidity hunt. This is a textbook liquidity hunt, stop loss hunt. There's this wick, this wick, this wick, this wick, and we literally traded basically just a bit lower than all of them, which would have triggered all sorts of stop losses, which is what happened. They took that liquidity, and they basically, this is just how market makers work. They basically market sell, push us down to here, they trigger all the stops, and then they buy them, and then they obviously buy, they take the other end of all those people stopping out, and then they buy the market back up. Absolute textbook market maker 101 there. Pretty much the same as what we had going on here. Pretty much the same as what we had going on here. And then obviously pretty much the same as what we had going on when we bought this back up here as well. So there's some people making a lot of money in Bitcoin at the moment, and it's not the regular traders. I can tell you that. I can tell you that for nothing. But some of their plays though are a little bit more obvious. Even if they're just a risk reward trade to take, like this one here, and even this one here. As soon as you start trading above that doji candle, you can almost, you know they're going to put the squeeze on basically. So yeah, so there we go. What else did I want to have a look at today? Yeah, so that the main thing was what the weekly close was going to look like. So it is still basically an indecision candle, but we are still closing regardless of how far we wicked up and how far we wicked down. The candle is still closing pretty much in line, maybe if not a few dollars above all these highs here, all these weekly high closers. So that is basically, I'm pretty sure, let's zoom in just to do, yeah, we can see. So this is going to be the highest weekly close if we close here or higher than we've had in, well, we'll just count them if you want. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and then this one was obviously higher. So in 14 weeks, this will be, if we stay here, the highest weekly close. Obviously, I don't want to jinx that over the next 3 hours, but yeah. So that's some useful information there, guys, because that is going to factor into some larger time frame, larger sized players that will be looking for new, basically weekly high closers. Because that's what you do. You buy highs, and you buy highs and you sell lows. But obviously I don't mean like the ultimate high by like 20k Bitcoin, but I mean when price is moving up, like so when this moves up, you buy the high, you buy the high, you buy the high, you buy a high, so, and you just play the trend. That's what I'm saying. I'm not saying you buy the 20k high. Anyway, yeah, so that's just, yeah, so that's so it's going to be an interesting week, I feel, because I do think if we're gonna stay this strong, and we're gonna regain 10k, which at the moment I would say that is more likely than testing the downside, in my view, especially if we do even the weekly close is just around here, basically around level with these. That is looking really good. We have tested buy side, we have been bought back up. The thing is, I know we've tested the upside and we've been sold back down, but the difference is this is massive overhead macro resistance. So to get rejected from this at the first time we've tested up to 10.5k in a lot of weeks isn't as bearish as you might think, relative to how bullish it is for us to get bought up from this zone here, which isn't necessarily that important at all. Just selling down into this zone, we're just selling back into this pennant here, into this larger time frame pennant, and we're also selling on a weekly 9 candle. So that is not necessarily that. Well, what I'm trying to say, right, let me get this out clear. What I'm trying to say is how bullish this buy up from here, where we didn't necessarily need to get bought up because the price is quite fine staying down here, is a lot more bullish than the price getting sold down from. Is a lot better for the bulls than it is for the bears getting price sold down from there, because there was a lot of technical factors that would have driven price down from there. There aren't a lot of technical factors that are going to push the price up from here. It can stay down there just fine, but obviously price action staying there out in the limit 10.5k is a bit out there, isn't it? And it obviously will smash back down, but that's because it's such a big macro level. It's out there on a limb outside this larger time frame pennant at basically like a massive overhead resistance, just based on recent highs. So yeah, you guys get what I'm saying, don't you? So what I'm saying, whilst this candle might look equally bullish and bearish because of the length of the wicks, what I'm saying is it was a lot easier for the bears to sell this down than it was for the bulls to buy this up. So it shows there's a lot of buying pressure in the market, and for me, that just puts the probabilities to the upside. And because we are so close to high levels, we are so close basically to 10k, closing above 10k, closing above these wicks, and then I mean that makes 10.5k a relative walk in the park once we close above 10k, and then it's just a case of I doubt we're going to get such a big rejection next time. I think we'll just blast through. Obviously we do know the downside. I always go through the downside. Obviously the downside was let's just go back to the 4-hour chart. The downside was basically closing candles below that 9,000, below this support, and then breaking down into here. And then you just look at how strongly with that we got rejected from that happening. So just look at the buying pressure that came in there, just on this little sets of 4-hour candles alone. We wicked back below, and that gave us all the buying pressure came in to actually buy us all the way up to well over 9,800, which is well over the top end of this resistance. So yeah, so all looking good really. All looking good. It all looks good until it doesn't, and then when it doesn't, we'll know it doesn't anymore. But whilst it does, you've just gotta go with the flow. The trend is your friend. We're looking bullish. There's no reason to be trying calling tops here, other than the obvious reasons like the weekly 9 candles and the overhead resistance. But whilst ever we are still sat at those highs, it's bullish, and the longer we sit up there, the more likely it is that we are just going to break up and start basically the 2020 bull run that we all want. Because let's face it, it is just easier when we don't have to hedge our big Bitcoin, hedge our Bitcoin exposure, and we can just sit long the actual Bitcoin, and then trade and then make money on our Bitcoin holdings anyway. So yeah, good times. Anyway, so yeah, so that's it for that, guys. I'm gonna go over the bot trades in a separate video just after this, so feel free to listen to that. It'll just be a quick update on how the bots are basically getting chopped up in the zone, but it's not as bad as it may seem, but I will explain that in the next video. So thanks for listening, guys. Remember, not a financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys soon.